And MiCA usually gets all the attention and all the fun, but there's another very important regulation that hovers and spreads its cast over the crypto market, which is the transfer of funds regulation. And that's what this panel is all about. It's about anti-money laundering and counter of the financing of terrorism in the age of the TFR, this transfer of funds regulation. For that, we'd like to welcome to the stage Paulo Cardoso Amaral, professor at the Católica University, together with Joosep from Chainalysis, Julien from Ledger, and Gonçalo from Bank of Portugal, who will be talking us more about the topic. See you shortly.
Hi, everybody. We were just feeling when waiting that we were some kind of rock stars or something, but it doesn't match, right? Welcome, and thank you for being here. I'm a bit annoyed with the news that we had about MiCA. Even yesterday I was talking with Miranda regarding the application of MiCA that I believed could happen for stablecoins in the beginning of 2023, which is actually what is written in the Eurolex site in the European Union. I was so excited. And suddenly I learned from her that it's not, it's 1 year afterwards. And now, today, just now, 18 months or something, come on, we are lagging. Well, we are going to discuss today, or right now, a little bit about the TRF rule that is coming, so AML. We have here Joosep, Julien, and Gonçalo. I'm not going to delay it further. I'm going to ask Joosep immediately his opinion coming from Chainalysis. What do you know about TRF that can help us? What should we expect regarding TRF, even with the news that we just had?
Yeah, thank you, Paulo. So I think the final text is not out yet on the TRF, but we do have a pretty good understanding of what is going to be involved in that. So I think most people know what it is about, so I think I'll just dive into the more important parts of it. Last time I was in Portugal, we had a discussion with the new Economy Institute, and we were afraid that the European Parliament may get their wish and force the verification clause on all the unhosted wallets. Luckily, it seems that that's not going to be the case. European Commission and Parliament came to an agreement that, let's say, that there's a sort of a middle ground where verification is only asked from first-party payments. So if I were to sort of withdraw funds to my own personal wallet, I would need to show some sort of a ownership or verify that I'm in control of this wallet. With third-party payments, now there is a new clause that doesn't require verification, which is a good thing, because that would have de facto killed the sort of the third-party payments in crypto. So instead, there is a middle ground solution where they, let's say, suggest to the use of blockchain analytics tools to monitor these transactions for any high-risk factors, and if any high-risk factors are found, then to conduct enhanced due diligence on those transactions and the parties involved. So good news for us in Chainalysis, obviously. But jokes aside, I think it's it's going to be interesting. The exact technical sort of requirements of how it's going to be mandated from VASP and CASPs. But yeah, so that's what we know so far, and I think it's a better version of the regulation that was circulated some months ago. So we're happy about that.
That's good. So, talking about unhosted wallets, Julien, I have a question for you, because you are at Ledger. I actually own a Ledger myself. What do you think about all this fuss about unhosted wallets? Is it possible to somehow control, or what are your thoughts about it?
Actually, our position regarding the TFR is that it's not as bad as it could have been. It could have been worse. We avoid an unhosted wallet ban, which would have been actually a terrible nonsense, to be honest. So there are some good things and there are some pain points regarding the TFR. A lot of good things, of course, like the peer-to-peer transfer are out of scope, self-hosted wallets are not banned. Maybe most importantly, for the EU privacy, There is no automatic reporting to the government agencies. There are some reporting, but it will be upon request only. And so it's quite a good news for the privacy, but also quite a very, very good news for cybersecurity, because when you've got a kind of register where the public agency can have the identity of people plus the crypto transaction, for sure it's a big honeypot for hackers. So there is some good thing, but on the other hand, under the TFR, the future crypto asset service providers, especially the crypto exchanges, will be required to collect an unprecedented amount of information on their client, even for a small transaction. You will have to collect the name, the birth date, the passport information, etc., your address. And, in a way, we could consider that this will be very cumbersome for the industry. It will burden EU citizens. Not sure that it will have positive aspect on the EU competitiveness. And at the end of the day, not sure that it will put an effective solution regarding AML, regarding KYC. So, for example, we talk about the transaction. That every CASP-to-CASP transaction, whatever the amount, will have to be verified. The CASP will have to implement KYC solution. Same between a CASP and a self-hosted wallet that do not belong to one of its clients, and same between CASP and non-Euro CASP. So you will have to put KYC solution. You will have to adapt a risk-based approach. But the problem is that we do not have the tools to do that. Technologically speaking, it will be very hard. So here we are in a weird situation where we've got the rules quite clear. Actually, it's more or less a copy-paste of what existing actually with the travel rules. But we do not have the technology. So yet, we've got a genesis of technology, and we don't take into account some very interesting solutions like zero-knowledge proof, for example, or a digitalization of the ID process, etc. So, in a sense, here the EU is putting the cart before the horses, if I may say. So I think we should have work on a more pragmatic way to deal with that, but hopefully we will have some additional times for the level 2 text. So I hope that we will be able to implement this kind of solution. So to sum up, it could have been worse, to be honest.
Thank you. I have to share that, even if I'm not supposed to be the speaker, I have to share that there's something that annoys me here in the whole process. We have the regulated world with financial services, and you have the unregulated world with something that seems some financial services but are not financial services. So we cannot give you a license, and that's it. But we are going to verify everything that happens there as if it were financial services. It's a bit of a mess, because the decentralized world that we have built, that is being built, is different from the traditional centralized world that has all these laws that is trying to use the same structure to control something that is new. What should happen, in fact, is what should change in the law so that we benefit from the technology of this new world without trying to encompass it to everything that you already know. Because if you do it, we are doing the same all over again, with the new technology, and we don't advance. So that annoys me, and that has implications on taxes, on AML, on everything. But the fact is, things are happening, so we have to work with everybody so that the law actually benefits from the new technology, and that gives me the stage I'm going to give the stage now with Gonçalo, that comes from Bank of Portugal. So we have worked with the Bank of Portugal here. We are still trying to initiate work with the local Security and Exchange Commission that is not even present in this conference. But Bank of Portugal is, and there has been a wonderful relationship and discussion with Bank of Portugal, and I thank you for that. I thank you for your presence, and I thank you for your openness during the discussions, we need you to perform good regulation. So my question to you is, knowing that the regulation will be coming and now that you have a public consultation on it, what can we expect? What are your thoughts? How can you help?
Thank you very much. Good afternoon, everyone, and thanks for the invitation and thanks for your words. We actually believe that this engagement with the addresses and potential addresses of regulations to find this always delicate balance between the need of implementing a compliance culture that has to be based on stability and technological neutrality and the concerns of the private sector is something that needs to take place. And of course, we are completely open for these discussions, and the idea of launching a public consultation was precisely to trigger these discussions. So answering specifically to your question, so what we can expect. So what you can expect from the regulator, at least in this initial stage, is that we follow strictly what we know as the best practices on AML CFT. So the regulation that we are proposing right now intends to consolidate the diverse aspects on the AML CFT preventive measures that should be applied by crypto asset service providers. And while we can say that to some extent it anticipates the requirements that will be set forth in the transfer of funds regulation, so it actually incorporates FATF revision 15 and the guidance on VASPs that was released by the FATF already some time ago. So we are not talking about something that is unexpected. So our idea with the launching of this public consultation is precisely giving stability to the sector and anticipating some requirements that will be undoubtedly enforced in the near future. And of course, I'm sad to know that the entry into force of MiCA was postponed because the entry into force of the TFR is linked to the entry into force of parts 1 and 2 of MiCA. But in this case, I would say that we can live with the disgrace of the others, because this will give even more importance to our regulation, since this is a good initial step to anticipate what will be universal requirements across the EU in the very short term. So what I would like to point out, at least in this initial stage, is that the transfer of funds regulation goes far beyond what would be a traditional transfer of funds regulation, because it contains some provisions on the substance that are not strictly related to transfers of crypto assets, but that define, for example, what should be considered a crypto asset for this purpose, what is the scope of application, and it's actually good that we will try to align all the terminology and the scope of application between AML regulations and MiCA, while leaving aside some things that should be left aside, like person-to-person transfers or when both CASPs are acting on their own behalf, leaving aside some transactions, for example, when they involve NFTs whose functionality is more devoted to payments or investments, where I have more doubts that they should be left aside, but at least we will have a consistency across the market. So the idea of our regulation is indeed fostering this stability and the implementation of, and facilitate the implementation of a framework that will be enforced in the very short term, so that no one can say that our requirements are unexpected. I would like to pick as well on this issue that of unhosted wallets. Indeed, I would say that the TFR made an unfinished job. So, and we need to be mindful that on top of the TFR, the European Banking Authority will release some guidelines on how to comply with the enhanced measures on unhosted wallets that are or self-hosted addresses that are now set forth in the TFR. So I would say that in the travel rule, as we know it, for hosted wallets will not apply, and this is actually good news, because by the nature of things, it would be impossible to apply it in the same way to unhosted wallets. But indeed, I think we need to work with the private sector on what should be the enhanced measures that financial market that market operators should apply, so to make sure that the owner of the unhosted wallet is actually the customer, because as you mentioned, so transfers to third parties are actually out of this requirement. So what we can say is that in our public consultation, before launching the public consultation, we carried out a comparative study of the different solutions that are currently in force in diverse jurisdictions, but it is impossible to have a complete view without feedback from the private sector, and so our idea is really challenging the private sector to provide their contributions, so that we are able to find this delicate but adequate balance between the different interests at stake. I know that this is for now a very high-level conversation, but in the interest of time, it is not possible to dig deeper. The FATF recognizes that to date it is not. There are no technological means with which we can say with 100% sure that it is possible to make sure that a self-hosted address or an unhosted wallet actually belongs to that person. But there are some mitigating measures that possibly we can apply, and I believe this will be the work of the European supervisory authorities in the coming years. So the idea of our regulation is basically follow the trends and do not require more, but do not require as well less than what we believe are the international best practices on these issues.
Thank you, Gonçalo. It's a pleasure to hear a regulator or a representative of a regulator talking with so much knowledge. I could give you an immediate feedback. We don't like to see our names and our transactions safeguarded somewhere, being a honeypot for attackers, for example. It completely jeopardizes privacy, and it completely destroys the nature of what is the blockchain and everything else. And another thing I can tell you is that with information systems, you can do whatever you want. And we have tools to, for example, and Julien talked about it, DIDs, decentralized identifiers, and zero-knowledge proofs. And the European Union, for example, has a project on the SSI, self-sovereign identity. We can use that. We can stamp transactions with complete privacy, maintaining, by the law, verifications with zero-knowledge proof, avoiding the fact that we have all our information stored somewhere, because that is the old way to do things, like on paper. But that's an immediate feedback, a bit emotional, not really, maybe saying rubbish, I don't know, but yeah, but we feel things and we want to see things in the right manner. Joosep, let me get back to you. In a few words, from all your experience, come on, Chainalysis, the company that is almost ruling all this area in compliance and helping everybody to comply, because we are good people, we are not, we are good people in all regards, so how can we comply well? What is your experience? What can you say to us to be compliant in a good manner?
I mean, obviously, for me, it starts with, first of all, understanding your business, right? So conducting risk assessments, understanding and having data-driven approach to all of this. So understand where your customers are based from, and then you can move on to the next stage of mitigating some of these risks, right? And obviously I can't sit here without saying that you should use Chainalysis or blockchain analytics. That's obviously part of it, but it's only a one part of the, let's say, the bigger puzzle, right? So you also need to take care of all the other side of the business. So we are very good at providing on-chain data, but if you have any fiat transactions, that also needs to be monitored. But I would say that everything still starts with understanding your business, the vulnerabilities, how can you be, exploited for financial crime, then understanding some of the trends in the ecosystem. So for example, what we often see is now there's a big push of institutional players moving into cryptocurrency. Their compliance teams have very, let's say, low level of knowledge about the trends in the ecosystem. So if you're moving into this and you have no clue what you're doing, that won't be an effective compliance program, will it? So understanding the typologies, national risk assessments, also, again, I'm repeating myself, data-driven risk assessments. So not just we are servicing X market, but no, how many of our customers come from a specific market? What are the risks involved in that specific market and so forth? And then moving on to using technology to mitigate and, let's say, control for these type of various risks that the entity might be exposed to. So that would be my sort of response to that.
Thank you so much. Julien, building on that, with all your experience educating and helping and discussing these matters at high level, what can you share with us? What is difficult? What is on your mind to help us in this manner?
The first challenge maybe is about education, as you said, actually, because education is so important when you want to talk with policymakers or officials. So that's why actually at Ledger we do that. We try to do some education. We also launched some initiatives like Ledger Academy, where you can find a lot of articles, podcasts, video on actually the crypto space, the NFT, metaverse, etc., DeFi business model. So education is key. For example, I was at the European Parliament during the TFR negotiation, and I was with some MEPs working on the unhosted wallet provision, and actually just explain what an unhosted wallet is was very, very important, and they were quite surprised to learn that an unhosted wallet is not even a wallet. There is no crypto in an unhosted wallet. It's just a private key. It's a password. You could have been used actually a sticky notes of this kind of thing. But, well, you use a Ledger device, and it's a very, very good choice. But there is no crypto in this device, and they were surprised. But those folks were in charge of the unhosted wallet provision, so that's why actually it's our job as a private sector industry to talk to the policymakers and to try to actually to be clear on what is our business model, what are the definitions, how it works, etc. So education, first education. And maybe remind some obvious realities, if I may say. For example, the fact that privacy is a fundamental right, protected by the Article 8 of the EU Charter of the Fundamental Right. So, of course, AML CFT is very, very important. But the protection of privacy is also very important. And of course, the fundamental rights in general are not absolute rights. You can have lot of exceptions, but these exceptions need to be proportionate and justified. And we need to keep that in mind, actually. Other key messages, but which actually it's true, but is that money laundering is not a crypto thing. I mean, the money laundering regarding crypto is a tiny proportion of the illicit volume passing through the financial system. For example, Chainalysis published a report, I think it was some 2 or 3 months ago, and the amount of money laundered via crypto assets represent 0.009% of global GDP, while, for example, the United Nations Office on Drugs and Criminals estimate that between 2% and 5% of money laundered via the traditional financial system, and of course cash. Even the European Commission published a paper, I think it was some days ago. And you want to launder money? Use cash and gold. I mean, it seems to be simpler and not crypto assets. And maybe another key message is that please take into account the blockchain tools to fight against AML. I mean, I used to work when I work at the French Financial Authority. I used to work with some law enforcement agencies, and actually they like the blockchain tools because on the blockchain everything is public, and at the end of the day they manage to find who is behind the addresses. So these key messages, it's quite challenging. Sometimes it's quite difficult to share these messages with the policymaker, but it's our duty to do so in order to have pragmatic and balanced regulation for the better of the industry and the European competitiveness.
Thank you so much, Julien. A question for you, Gonçalo, in these terms. Bank of Portugal showed to be open to public consultation, discussion. You are here, perfect, but we cannot do everything in Portugal. So we have many other entities involved, and it has to be global. The MiCA, for example, is a regulation, so it affects everybody else at the same time. So what is Bank of Portugal doing? What can we expect? Is it you? Is it just your team, or is it more encompassing in the Bank of Portugal and other entities at the same time?
So nowadays, the only remit that was entrusted to Bank of Portugal is AML CFT. So since MiCA is not yet in force, so the only effective competencies that we are able to exercise at the current date is AML CFT. That said, of course, on the policy side, not only when it comes to the so-called AML package, but also in the context of MiCA, we, together with our Ministry of Finance, we have been following these two very relevant negotiations, and in this context, we had several interactions with other policymakers and with other regulators, so to make sure that what we propose actually makes sense, since this will be directly applicable and harmonized regulations. So it is good that they effectively comply with their intended purpose. So I would say on the less operational side, we engage with our counterparties and with policymakers in the context of these negotiations, both MiCA and the AML package, that we are following very, very, very closely. So then, on the more practical side, what I can say is that when we drafted this draft regulation, so in addition to the comparative study that I mentioned, so we undertook several bilateral consultations with other regulators to understand what are their practices, what are their requirements, and we are actually receiving as well some questions from other regulators. So that constant interaction actually takes place, and I would say at a level that is close to the one that takes place in the context of the classical financial services. So then, on the even more practical side, so as you may know, we have gained this competence from the AML CFT perspective since 2020, and so since then Banco de Portugal has to register the crypto asset service providers that fall into its supervisory remit and then supervise them for AML CFT purposes. So in the context of these registrations, we actually consult with other supervisory authorities, counterpart authorities, so to make sure that the applicants are suitable and that they actually intend to apply adequate procedures. So on top of that, we are currently preparing the next national risk assessment, so which will be conducted by the National AML CFT Coordination Commission. So, and in this context, of course, we can expect that we will have a dedicated chapter to risks related to crypto assets. And on top of that, of course, we engage with our FYU and our law enforcement agencies on specific cases and on specific investigations.
Thank you so much. I cannot refrain myself to share just a thought on this, which is the following. We have the tendency in this modern society to make someone accountable for something, like a bank is accountable for the information that it manages and the processing and so on and so forth. So for AML, we are doing the same. That's why we are asking, please give us the transactions and the people, and we have this register, this ledger, and then we will be able to follow everything. The vision of self-execution is different. We can ask the blockchain to do whatever we want because it's smart contracts. Like I can put in the blockchain, confirm the policy of a regulator. So we don't really need to go through custodians to achieve that. And if we have that in mind, that will be a completely different world where you can maintain privacy and at the same time comply by the law, because again, we are on the good side. And that's a thought I would just like to share because I can. We have reached the end of the panel. I promised Joosep has a flat catch, but we are all available. LinkedIn, just say something, we'll be available. Thank you so much.
Thank you.